want to earn your business. We want to be competitive. And if you're getting a quote and your customer shopping on price, let us have a chance to win that business because we want to earn as much business as we can, and also we feel from a pricing standpoint we are as competitive as there is in town, and we don't want to be priced out. So keep that in mind. I am going to turn it over to Dave and Melissa. Dave, I'm going to step on your comments probably just a little bit, but we have talked about these rate cuts that are coming. I think there's getting a little bit more clarity that September might be the time that we can expect that. And I think, as I mentioned, the downshift in activity, I think we have a little buyer fatigue with rates where they are. And obviously we can get creative, and David and Melissa have talked about how to do that. But I think once we see that shift in policy from the Fed, and obviously they're not directly correlated with interest rates, but it will have an impact. And I think I really believe that what is normally a traditionally slower fourth quarter will be buoyed by that information. And that's what I'm counting on. That's what I am reading. And that's what I think you all should keep an eye on. So David, Melissa, I'll give it over to you and you can add your comments to that.
Well, thank you, Peter. And honestly, I couldn't agree with you more on everything you just said. I think everything is absolutely spot on.
Oh, he's just sucking up.
But along the lines of your comments, a lot of the data lines that we follow are continuing to point toward lower rates, and I'll just highlight two things quickly this morning. First is the May personal consumption expenditure number. The PCE, as we've discussed before, is really the number that the Fed really tracks. And that came in at 2.6 for both the headline and the core number. Just to give you some perspective on that, the PCE, its peak for the headline number back in 2022 was 7.1%. And for the core number was 5.6%. So we've made a lot of progress in terms of fighting inflation. And I know that from various things I've read and comments from Federal Reserve members that they are starting to acknowledge that. The second thing is the Bureau of Labor Statistics employment numbers. In June, we added 206,000 new jobs. Which was a little higher than expected, but in April and May, those numbers were revised down by a combined 111,000 jobs. Unemployment's now running at 4.1%, and wage growth has fallen to 3.9%. So those are two very important data lines that we think are pointing toward lower rates, and we do expect probably that September rate cut is looking more and more probable. And again, there's going to, as much as the rate cut's going to impact things, it's just going to be the psychology of the market. The market's going to see that, hey, the Fed has started cutting, and then natural market forces will take over and do a lot of the work for us. So yeah, hopefully we can get down to a nice round 6%, and I think that really moves the needle. Now,
I think that would be huge. I mean, I think everybody would be very happy with that.
Turn it over to Melissa for some important stuff now.
All right. First of all, I wanted to say good morning. And then secondly, Hometown Heroes. You've heard us talk about that numerous times. The Hometown Heroes funds are out. 17, that would be bad. 72 million is available out as of today. That is 25% of the total allotment went out already. And that was on a short week. That was during the 4th of July week. So 28% already going out is kind of crazy. So again, we can't stress enough, if you have folks that are work for a Florida-based business, this is a fabulous loan for them for down payment. They can get up to $35,000, and it's a fabulous program. And don't forget too, we also have a conventional program that has the 100%. So if somebody doesn't work for a Florida-based company, and The other thing I wanted to talk about, and I think everyone's received the email about our jumbo pricing. I want to tell you guys, I know you guys are, a lot of folks have the higher end clients. Our jumbo rates, we've priced it against some banks, some credit unions. Not only that, but we've looked at some wealth management teams and some private bank. And our rates are right there, guys. So if you've got some jumbo, don't have a fear that they can do better at their bank or their wealth management team. We have found a great source for jumbo lending.
Yeah, one of our lending partners has really stepped up to the plate to help us in this area. And you know, when you're borrowing $1 million or $1.5 million, an eighth of a percent in interest rate is real money. So please keep us in mind, and we'd love to, just as Alliance Group Title, we really feel like we have a very, very competitive program. We feel like our pricing is as good as anybody in the market, not only in the jumbo sector, but anywhere else. So please give us a try. I think you'll be very happy.
Thank you.
Thank you, guys. On just a quick administrative note, and this really just affects the Weber office, but just wanted to let everyone know we finally got our permit right before the 4th of July. So that's great news. The construction company was in our office yesterday and claims that they will be here as early as within the week. So you're going to start seeing some activity around here, regardless of whether you work here or not. Thank you to the many agents that we've had to reposition and move around to get ready for these changes. And when we are finished with all those things, we will invite everybody to check it out. But we are reconfiguring the space almost completely. Excited about those changes. It's time for some updating, and we are excited for that. So stay tuned for that, but I just wanted to put that out there to those that are there. Before I turn it over to Dave, Karen, was anybody?
And happy post 4th of July. Hopefully you all had a great 4th of July and are refreshed after a couple days off and shooting off all your fireworks and all that good stuff. I'm going to share my screen. So let's start with some good news. You know, I like to talk about what's going on in the insurance world. It's something that has negatively impacted our business, and so it's important to keep up with it. It's exciting to see that the insurance premium growth has started to slow down. And that's great news. Some of the legislative analysis has indicated that changes that were made in 2022 have started to trickle down and are now having an impact. So much so that we've got rate decreases that are starting to happen. So if you're with either any of these three companies, American National Property, Safe Harbor, Florida Peninsula, they've already applied and been granted rate decreases. And there's 6 other companies that are in the process right now of filing rate decreases. So again, all this stuff takes a little bit of time to trickle down to get to your premium, because you renew your homeowner's insurance once a year. And so you may not see it in a renewal until the next one. But I want to give you the ammunition so that as you talk to customers, because I know I hear it in talking to people, and I know you hear it, that, oh, Florida and homeowners insurance is horrible. You need to be able to share some of the good news as well, that we're seeing the legislative reform take place. We're seeing decrease is taking place. Companies are applying for the rate decreases. So that's good. And even those that aren't applying for decreases are not applying for increases that are as significant as what they were. So good news, stability that is starting to take place in the homeowners insurance field. The state budget has just been approved, and there's some real big wins that Florida Realtors have worked on. This is a nice graphic talking about it. Dave and Melissa talked about Hometown Heroes. There was $100 million for that, of which almost 25% of it or more has been taken. 200 million for Safe Harbor. And actually, a couple of these I'm going to talk about actually in some of the next slides. So let's go there. New laws that go into effect July 1st. So they started at the beginning of this month. This House Bill 64 protecting private property rights with squatters who now can be removed much quicker out of a dwelling and a much easier process. The property insurance cost reduction. Here, the legislature has created a deduction for homesteaded properties on property insurance, residential property insurance, where they're dropping the total policy premium by 1.75%. That's some of the tax that's applied to it. So that, in addition to the rate decreases, is going to begin to bring those premiums down. Increased transparency for condominium documents. It used to be for 100 or more units, condos had to post digital copies on a website. That has now been reduced to 25 units, and that's going to take in most of the condo complexes out there. They're going to have to post digital copies of the official condominium documents on their website. Hey, that's great news, because we all know how difficult it is to get documents oftentimes from condo associations. But even more importantly, we know that at the end of this year, milestone inspections and structural integrity reserve studies become effective, and they have to have been done. Part of this bill now includes not only the digital copies of the standard condo docs that we have known for a while, but now it includes the building inspection reports and the reserve studies. So that's good news, because getting them sometimes is difficult. Now they're going to be required 25 units or more to post them. So they're great victories. For HOAs, the 100 or more parcels, they're now going to have to deliver physically or digitally copies of the rules and covenants to existing members plus new members. So now as new members come in, they're going to be given those documents, and they're going to be able to make sure that they comply with the rules and regulations. I worked with Representative Buchanan, and we put forth a bill that would have required documents be provided in a real estate transaction during the process of the transaction with a right of cancellation. That bill did not get passed, but we're hopeful to reintroduce it again next session. I would like to see people be able to see the actual documents and the rules and regulations before they purchase, so that if there's things they can't comply with, they don't buy that property. So we continue to work on that. Additional changes. The MySafe Home or Florida Home Program got 200 million. And this allows for home inspections even without applying for a grant. I don't know if you're aware of that, but you don't have to apply for the grant. You can still get the inspection done to help you understand the things that you need to do to harden your home. Low-income homeowners can receive up to $10,000 without having to match the amount. The original program, if you spent $15,000 or more, you would get $10,000 back, but you had to spend money. Now, part of this provision, if you're considered low income, you can get $10,000 without doing the match. So that's huge for low income individuals. And we've tiered the rollout. So that started on July 1st for those low income homeowners age 60 plus. And then we roll into just low income of any age, moderate income 60 plus, moderate income of any age. And then by August 31st, it's open to everyone. There's 200 million for that. It will, I expect, get used up rather quickly. Last year, the legislature added additional funds. Whether they'll do that this year or not, I don't know. Also, this year, there is a provision where 30 million has been added for condominiums. In the past, it's only been single family homes. Now it's condos that are within 15 miles of the coast for specifically hardening roofs and openings against storms. So that's a plus for condo owners as well.
Dave, you have a question from Kim Orla in the chat, if you could check it out.
I've got my PowerPoint up, so I can't really see the chat. Can you read it? Or
For the HOA, does that also include financials for the documentation?
Yes, I believe, let me just see what, no, it's the rules and the covenants. No, it's not. I do not believe that it includes the financials, just the rules and covenants.
Okay.
All right. Also, we've got funds that have been allocated for combating unlicensed real estate activity, which is also a real positive. All of those things went into effect on July 1st. So other dates that are coming up that you need to be aware of are a flood disclosure. Now, we're talking about this at Florida Realtors, how to do this. Will it be an addendum to the contract? I don't think so. I think it's going to be dealt with similar to the disclosures that are in the contract right now. You have a section of disclosures. There's the energy efficiency brochure. That is a disclosure that has to be received. I think what we're going to do is put out a disclosure that the seller will fill out and sign, and it can be provided to a buyer, and they will acknowledge in the contract. There will be a blanket statement in the contract that they acknowledge having received it. So we're still working out the details of that. That doesn't go into effect until October 1st, but it is one additional disclosure. And it really comes down to two questions as to whether or not you've received any funds from FEMA for damage or any other funds, if you've made a claim and if you've received funds from FEMA. So we'll be talking more about that as we get closer. The increased transparency of HOA documents. This is now associations with 100 or more parcels are going to be required to maintain their official records on the website. That's new. It was there for condos of 100 or more, and then it just dropped with condos to 25. So now it will be that way for HOAs. So again, excited because it's difficult sometimes to get these documents from the HOAs or condos. But now if they are on a website, even if it's password protected, the owner who property you're listing should have access to that website and can give you access to be able to get the documents. A third one that will go into effect later deals with $25,000 of assessed value that is exempt from all ad valorem taxes other than the school district taxes. And the proposal is for that to be adjusted annually for inflation. It's been a $25,000 exemption for years. And so it's been put forth that needs to be adjusted rather than being static at 25,000. That needs to be adjusted for inflation. That's something that needs to be an amendment to the state constitution. So if it's approved by the voters, I think it will be on a ballot in November. If that is approved by the voters, then that will take effect January 1st. But that's not something the legislature voted to put it forth for a amendment to the state constitution, but it has to be approved by the voters. So stay tuned on that one. All of these things that I've shared with you are things that I think are important to you. There's more things that have been passed and approved, but all of these things are things that Florida Realtors has lobbied for, pushed for, promoted for, and we've been very successful in the amount of things that we've been able to get accomplished at the state level. So that's pretty exciting. So this saw an article that I thought was really interesting, because as we look at active listings that are up, everybody's like, wow, man, the inventory's gone so crazy high. And it has. When you compare it with March 24 and March 23, we're up almost 54%. And you go, well, that's just like huge. And it is huge, but it's because we had such a drop in at the end of 2021 and 22, that we're now building up. It's not the whole story, because when you look at what you're comparing to, if you go back to the pre-pandemic and you compare it with numbers, say in 2019, you get a different story. Because if you look at the numbers in March of 2019 at 161,000 versus March of 24, we're actually down 7.5%. So if you put that into perspective, we are not even up to where we were pre-pandemic. So it's not that alarming. Here's a chart that was put out by Florida Realtors, which is really interesting. You'll look at here pre-pandemic where we were at with single family homes and condominiums, and you draw that line across and you see how much we dipped during the 20, 21, 22, 23, and 24. We're increasing that inventory, but we're just still below where we were pre-pandemic. So it should not be that alarming that we've got such an increase in inventory. It provides buyers with more opportunities, and it makes for a better market for all of us. So I think it's good news, not bad news. So